Joining me now is Alan Boomer, Chief Investment Officer at Momentum Advisors. I wonder, Alan, if you look at this market right now and say to yourself, things have gotten a little bit extended to the upside.
Absolutely. I think the market's overbought. It seems as though the market's been kind of cheering on bad news in hopes of additional stimulus. If you look at the coronavirus and the cases are growing, the market's rallying. Again, sometimes you get in these funny periods where the market just seems to be cheering on the bad news in hopes of more stimulus.
So what do you do? I mean, are you selling? And if so, what are you selling? Where are you trimming? Are you taking it from the winners? Or are you trimming it from the losers? What exactly are you doing here?
Great question, Dom. I think right now you've got to really realize that it's a stock picker's market. So if you're long, SPY or the S&P 500, now is a great time to get out of that and maybe switch into some individual stocks. I also like gold. Gold is one of these stores of value that, I know you guys talked about earlier in the segment today. And one of the big rationales for gold is the idea that, historically, if you look at fixed income or bonds, is really the place where you go when things are crazy. The reason not to own gold is that there was no income. Well, today, with bond yields being so low and expected to be low for the foreseeable future, gold now is an attractive alternative.
But isn't that what's driving stocks, Alan? I wonder, because you have negative yields in Europe. You've got no yield basically here in the United States. Gold doesn't give you any money. But if you buy some kind of a blue chip stock, maybe even like a Microsoft, you actually get a dividend payment each quarter. Isn't that what's driving some of this action in stocks, this idea that there is no alternative?
Yeah, we're the smallest, the tallest midget in the room, for sure. The issue, though, is that a lot of what's driving stocks, it's stimulus. Microsoft aside, right? Stimulus is really, like, we've pumped an unprecedented amount, over $2 trillion of stimulus into this economy. And it's really not stimulus that's going to drive the economy in the future. It's actual economic activity. It's actual profit. And so I just think it's a sugar high right now.
All right. So if it's a sugar high right now, there still have to be places where you are finding some relative value. What would you want to own? What types of stocks, industries, what names are you actually trafficking in right now to the upside?
Yeah, good question. So I like tech and I like certain types of real estate. So I'll give you real estate first. One stock that I really like is Prologis. Prologis is a REIT, but it's specialized in the industrial sector and in the distribution and warehouse and logistics sector. So if you think about everything that you order online, anything that you order in terms of e-commerce, it has to get to your house some way, right? And it comes through trucks, it comes through warehouses and distribution centers. And this real estate is very valuable in a post-COVID world. So I like Prologis. You get a nice almost 2.5% dividend yield. And I think the stock is going to at least 100. And again, there's real economic activity that backs that stock.
All right. Now, what would you stay away from? Just got about 30 seconds left.
Sure. I don't like the banks. I don't like banks. I don't like, the rest of the REIT sectors. I think retail is going to be just hammered continually. I think the banks have a lot of exposure through commercial mortgages.